the moment we've been waiting for. We will hear from the man himself, Saurabh Dalal. Come on up. So slide, you can just.
Hi everyone, how's everyone doing? Good, all right. I want to say thank you Vereda, and I want to say thank you very much to everyone involved in the American Vegan Society. Of course that includes Freya and Anne and so many people on the board and the volunteers and all that for putting on this great event. Hopefully you had a lot of good food. Everyone is well fed? Yes. Hydrated? Okay, yes, that's good. All right. I'm going to forgive anyone if you need to doze off for a few moments after like a big meal and all that. I mean, how can I fault you, right? You had a good meal, and now we're here and sitting down, so it's okay. I won't be offended. We'll be fine. So also I want to say that, I actually got to know Freya and Jay. And Jay, of course, passed away 24 years ago. And I consider them my inspirations and people who are like, advisors and who advised me along the way. And so I remember staying here years ago in the 90s, and we planned a number of conferences and all that. So I just want to say, my appreciation to both Freya and Jay and the families for doing so much and for bringing this great vegan organization. I call it the OG vegan organization in the Americas, because it is the original, right? It was founded in 1960, as you know. And so this organization has really done a lot to kind of put, the idea of veganism here to people in North America and elsewhere. And what I love about it is it really talks about the philosophical basis of veganism. Really, it's about ahimsa, nonviolence, and this dynamic harmlessness. And so AVS has a very special role in our movement, and also in this 21st century. And I think a number of us are also helping and help the organization to kind of transition and move forward in the new climate that we have here. And so again, thanks to ABS for doing so much and for the role that it's going to continue to have, and it's going to be helped by all of us who are supporters and well-wishers. So thank you all for being here. And it really is an honor for me to speak about a topic that I'm actually very passionate about, veganism. And then also, how can we all be involved in kind of doing more? And so what I'm hoping to do today is to, by the way, can you all hear me okay? Is this microphone all right? Yes. Okay, very good, thank you. Thanks for that. Okay, and so I think it's an important topic. It's also a very broad topic that I can only do so much in about a half an hour or so. So I'm going to try my best. I'm going to offer some thoughts and some ideas, and hopefully we'll have some good questions too. So thanks. Talked about Jay and Freya, about the organization, about Anne, kind of where we're headed to next, and I'm so happy to be here. So one disclaimer that I want to make is I am not trained as a financial professional. I'm not certified or licensed in any way, and so why am I here? And why am I talking with you, right? What I see is that I kind of am from the same perspective you are, which is I've kind of, feel very strongly about being vegan. I feel like there's a responsibility that each of us has, and so I kind of approach it similar to what I think many of you would, and saying that I'm really interested in finding out more. I've spent a fair amount of time doing that and talking to a lot of people and getting involved in certain projects. So what I hope to bring you is a perspective on investing, but really from the person who's really a passionate vegan, and what is it that I can do. And I don't really have any ties, but I will tell you a disclaimer further down. So everything I'm talking about, I don't really have any particular vested interest in, other than I want us all to be successful. Right? The more successful we are as individuals, the more we can help this great movement. And so that's my perspective. And just a little bit of background, as Vereda had mentioned, I was born in India. I came here when I was very young, and grew up here in the DC area. And so, for me, I'll give you a little bit of background, which is, my parents emigrated here. And so I came with them when I was very young, when I was 5. And, my parents came from very humble means. They're no longer with us today. But, what they had with them was this desire to really work hard, to succeed, and then to make the world a better place. To become part of a community, to build a community, especially when we came from India, and to build a community here. And what they did bring with them, which was a wealth of things, which was things like values and principles. And really what it was about hard work, dedication, and this idea of community. And I was raised in the Jain tradition. So how many of you are familiar with the Jain religion? Okay, a number of you are. Okay, a lot of you are. So the Jain religion, and the Jain religion really has 5 principles at its core. And I want to mention those to you because it's going to resonate, I think, with a lot of things that we all kind of feel and believe. And the main principles of Jainism, first and foremost, is ahimsa, which is nonviolence, right? How are we, and this is all in thoughts, in our words, and in our actions. Ahimsa, nonviolence. Second is satya, which is truth. And it's really about seeking the truth, living the truth. The third is asteya, which is non-stealing. It's really about taking only what is given to you. And we question what's really given to us in this world. And the fourth one is brahmacharya, which is really about purity of mind and body. And it's kind of the focus of the energies that we have onto things that really are important. And then the fifth one is aparigraha, which is detachment, like detachment from material things. And I think when we go through these, I think a lot of people are kind of nodding their heads because these are a lot of the same principles that we believe and that has kind of brought us to being where we are today, which is this whole idea that veganism is really important, morally, philosophically, and it underpins a lot of what we do and what we believe. And so these are principles that always are helpful for me. And so in any part of any aspect of my life, I see this as a guiding framework to make decisions. Okay, so with that backdrop, it kind of speaks to kind of the purpose that we all have, what's the mission that we have, and how can we best align ourselves to our values. So I'm going to refer to my notes every so often because I haven't given a talk without PowerPoints or whatever, so I'm going to kind of let it flow, and I'm going to check in every so often. So then I said, okay, so I think what's great is that many of you are vegan, many of you are vegetarian, a lot of you are thinking about it, and that's fantastic for you to be here. And what we're hoping to do with events like this and all the great organizations is really to empower people with information, right? We get a lot of information and stories and narratives. We don't always get a complete picture. And so I think the goal here isn't to really convert per se, it's to inform and to educate and to enable people to share ideas so that we can learn from one another and we can question the narratives that exist today, and then we can decide with more information, how do we make the most informed decisions possible? So that's really the goal, right? The goal is kind of say, how can we give everyone more information, an opportunity to discuss further? And so our purpose, our mission with that, and so I think we do a very good job of deciding how do we spend our money, right? Oftentimes, what do we eat? What do we wear? What products do we use? I think a lot of us here have probably thought about that quite a lot, and we've probably done a pretty good job of that. We can always do better, right? We've probably done a good job. Okay, then it's about how do we make money? How do we earn a living, right? What is it that we're doing that's really aligned with our principles? And I think a lot of people are questioning that too. Is what I'm doing most in line with what I really believe is important in this world? And then another aspect is, where do we spend our time? Where do we donate our money? These are all very important things, right? Because we have so many great nonprofit organizations like the American Vegan Society, the Coalition for Healthy School Food, which I'm a board member, Amy Hamlin, who's one of the executive director here. So many great organizations, right? And I know we're all generous with our time and even donations when we can. That's really important. But then what happens after that, right? And it's really tough, and it's been challenging over the years. We're talking about years from 1960 to where we were in the 1990s to where we are today, and things have changed a lot. I think there are a lot of opportunities. So what do we do with the money that's left over, right? And that's really the basis of my talk here, which is investing ethically, and how do we help fuel the vegan economy, right? And it's that money that's left over, how can we do the best with that? And I look at that in two ways. One is the impact that we have by where we invest our money, and two is what is that financial return? And there has to be something of both, because everything else that we're doing, as important as it is, it's not about investments, even though you can invest in people, you can invest in organizations, and that's a very good thing. But now I'm talking about a little bit different. The impact of the investments that we make in order to generate a return on that investment, right? So that's kind of what I'm going to focus on here. So a few quick questions. So we've had lunch here. How many of you are really excited about my talk, or are you really waiting for the real star of the show, which is Seth Tibbett, who founded Tofurky. You can be honest. How many are really just kind of like waiting your time because I'm the warm-up act? And that's okay. I'm good with that. All right. There's a few honest people. That's good. I'm good with that. Let me answer the question. I'm kind of waiting for his talk too. Okay. So all right. So anyway, so I'll move this along as best as I can. But Seth's a great guy. And by the way, people ask me about this T-shirt. This T-shirt is actually the Lviv Vegan Kitchen. It's a Ukrainian food relief program. It's a vegan Ukrainian food relief program. Seth is one of the great sponsors of it. I've learned about it. He gave me this T-shirt. I think it's a beautiful shirt. And so anyway, just want to acknowledge the T-shirt and so much great work that's going on in this world and the Ukraine as well. When people are displaced and they're actually not able to get food, there are people out there actually providing great vegan food. So many great causes. So, all right, we talked about my being the warm-up act. Okay, next question. How many of you are kind of new to investing and don't really feel comfortable with the idea of investing money? Just a show of hands. Okay, there's some small number. Okay, I'm going to say maybe like 10%. Okay, great. How many of you are, pretty comfortable investing and you do invest in different types of things? Just a show of hands. Okay, maybe it's a little bit bigger number than the previous one. All right, third question is, how many of you consider yourselves to be seasoned investors and really explore investing in many different ways? One. I can see my friend Sid, who's actually a money manager and an investor. Yes, a few. Okay, great. So this helps me get a sense of who the audience is here so I can kind of tailor it a little bit to what it is. So not a lot of really experienced, some that are more that are moderate, and some that are new. Okay, that's great. That helps me. And how many of you would say, I'm really happy with what my investments are doing, where I'm putting money, the returns I'm getting, I'm feeling pretty good? How many of you? 1, 2, 3, great. All right, 4, 5. Okay, I see 5 or 6 people, great. You could probably be giving this talk too, but I'm going to continue. So, all right, so that's great. So what I'm going to do is this next maybe about 25 minutes, I'm going to talk about a few different areas. One is really the motivation we've talked about a little bit, and some things about the history of this. 2 is going to be about criteria and screens. I'll talk about that a little bit. 3 will be about investment types and investment categories. And I'm going to focus on one of those a little bit. And then some resources and some other information I think would be helpful. So the first one really is about this idea of what is ethical investing. And I think one of the big questions we have to ask ourselves is, as individuals, what do we think is most important? And what is that primary criteria? And so for this group, and for what I think is, for me personally important too, is this idea of veganism, right? And that it can mean a number of things, but my primary criteria is really, how do I look at it from the lens of veganism and say what's in line, what's not so much in line? And so that's one. But you may have other criteria. I think sometimes you're going to see some conflicts, and it's good to identify what's my primary criteria versus what's my secondary or other tertiary, other criteria. And so this perspective is going to be that. Now let me just give you an example of something that's contrasting. We also, a lot of us probably feel like we are also environmentalists, right? We're conservationists, and we believe in that. And of course, veganism is a part of that too. But there could be organizations or activities that there will be a conflict with. For instance, some conservationists may be okay with having certain individuals of a species be removed, killed, culled, in order for that environment or that place to be more healthy, right? Some of us may not feel comfortable with that, right? And so the primary criteria, if it's really veganism based on compassion and respect for all, right, we may have a small conflict. So what is that primary criteria? And that's really important to identify, and what's some of the secondary ones, right? So criteria is really important. And this idea of screens. So actually, let me say, so we have the criteria. Now, how many of you heard of things like SRI? SRI, you're familiar with, right? Okay, some of you are. No, not many. So SRI is socially responsible investing, which has been around for a long time, right? But it's all based on certain criteria. And historically, it's always been things like, how do we not support companies that are, say, engaging in tobacco products, or alcohol, or defense industries, or it could be environmentally unfriendly. And SRI has done a good job over the years, over the decades, of creating a lot of investments and funds that you can have that sort of a lens. To a lot of us, that wasn't enough, because our view is really more about justice, respect, compassion for all, humans, non-humans, the planet, all of that, right? So SRI did a good job, but it wasn't enough. ESG, how many of you are familiar with ESG? Not too many, few. Great, ESG is environmental, social, and governance. It's a similar approach, and there's some differences, and I won't go into that here. That's not the basis necessary for this talk. But those are also factors that people use to screen investments and to say, how can something be more if it's more environmental, if it's more socially, a good thing, and the governance practices that these businesses or companies use. So ESG is another good area where a lot of good work has been done, but it doesn't always fit the need if your primary perspective is from, say, a vegan angle. Okay, and then also impact investing. And this is really about impact investing. How do we make an impact for the money that we put that's beyond all the things that we spend, and what do we do with that money? So impact investing, SRI, ESG, we're all part of the same. It's all based on criteria. So the next part is screens. What do I mean by screens? So like filters, right? So you have these things called positive screens and negative screens. I'll give you some examples. So what is a negative screen, right? If you're looking at an investment, you might say, here are my core values, here's my key criteria, and certain activities or companies don't really fit that. One example is, if I'm going to invest money, let's just use stocks as an example, right? McDonald's may be a company that I do not want to invest in because they're really contrary to some of the values that I have. Now, of course, everyone is moving towards that. They want to be more environmentally friendly. They may adopt some practices that might help the animals a little bit. But generally, that's an investment that a lot of vegans may choose. I don't want to invest directly in that. So a negative screen would be a way to assess and to say, that's not something that kind of fits what I really want to support, and so I'm going to move that out of my investment world, my investment universe, right? So that's a negative screen. So products and services that are contrary to those core values and the key criteria. So the flip side, what's a positive screen? A positive screen is, now I'm looking for companies that are actually doing things that are very much in line with what those values and core criteria are, right? And so what might that be? If I look at stocks, let's do a flip side. Beyond, if anyone knows the company Beyond Meat is actually a vegan company. And so in terms of a screen, they're actually trying to displace animal products. They're actually trying to do something that's better for the world if that's moved forward. We'll talk about performance and returns and all that, but in terms of a screen, right, something like that would be a positive, and you would actually consider that type of an investment because that's in line and it's going to help, alleviate or take away from the negatives, right? So that's negative screen example, positive screen. I think those are good to always note. And so, so screens. The next part I'm going to talk about here, let me just do a quick time check and make sure that, it's 2:30. All right, so I've got about another 15 minutes.
Keep going, I came for you.
Thank you, Eugene. All right, I'll find a way to help you. Thank you for that afterwards. Okay, great. So next is investment classes. So, we can invest in a lot of different things. I'm talking about investments in the more traditional sense of an investment, right? I'm putting money somewhere in order for me to get a return on that investment, so it'll grow over time. As you know, if you have the mattress philosophy, you take $1,000, you put it under your mattress, probably pretty safe, right? But what happens over time? The $1,000 that's going to buy you today, 5 or 10 years from now, it's going to take much more. Let's just give you an example. 20 years from now, that $1,000 you had, you're going to need, at say inflation, 2.5%, something like that. You're going to need $1,600 or $1,700 to buy that same, amount that $1,000 bought you originally. So inflation erodes away at the money. So if you put it in your mattress, which of course everyone can do if they want, as long as it's safe there and no one else knows about it, right? Okay, that $1,000 is pretty safe. It's a low risk investment, but the impact is not much, and you're also losing over time. So what can you do? Different investment classes. One is more cash and cash instruments. It could be in a bank, and you can get interest in your checking account. Checking accounts are very low, virtually zero. Your savings accounts in banks, now you're actually doing much better. Probably getting 3%, 4%, maybe 5%. You're getting that. CDs are kind of like that. It's kind of cash. You're not doing much with it, but you're going through someone else, and it might be a bank. And what does a bank do with the money, right? As we all know, it's not just locked away in a vault, right? Banks do something with the money, and they lend that to other people. And most times, we have no idea who they're lending it to, right? They could be lending it to wonderful people who are looking to buy homes. Fantastic. That's a good thing to support. They could be lending it to many different businesses. And some of those businesses may be completely contrary to the things that we believe in. We just don't know. So when you do that, there are consequences to making that investment in a bank, even if it's a very secure, safe return. Because they're not keeping it in the bank. They're lending it out to different things, and you are indirectly supporting whatever those things are. You're getting a return. So even if you put into a bank, there are consequences, right? And we don't know what a lot of those are. Okay, that's cash, money market accounts, all of that. Then you might have bonds, right? And bonds are good investments, potentially, right? Bonds are where you're actually funding, you're giving a loan effectively, and you're funding, you get a bond, and then you're actually loaning money for a specific project. And you can choose a lot of what kind of bonds you want to basically buy. So that's good. You have control over some of that. And then they'll do a lot of things with it, but you'll get a fixed rate of return. You'll get some, interest on that bond, whether it's over time or at the end, whatever. But bonds are good, and you can do that, and that has some effect. Because you can kind of choose, do I want to do a municipal bond? Is it supporting a government project? Do I want to support something else? Corporate bonds, junk bonds, there's all sorts of things, right? And there are funds for all these. So that's good. Stocks. Stocks are obviously one of the basic ones. And what is a stock? A stock is sort of, to simplify it, it's ownership of a company, right? And you have an ownership of that company, and based on the growth of that company, they might return you dividends, which is periodic payout that you get, small amounts, a few percent maybe, if they pay dividends. Or you might get, the growth of the stock, and that stock value can go up, and it can also go down, right? So depending on how that company does, it can go up a lot, or it can go down to zero. There's always that potential, but you look to invest in good companies, right? So stocks are a good investment. I'm going to talk more about stocks. I think that offers the potential for a lot of impact, and we'll talk about that in a moment. What are some of the other investment types, other investment classes? Anyone want to throw out something?
Mutual funds?
Mutual funds. Mutual funds, I'm going to say that's probably related to stocks and bonds.
Stocks, okay.
Yep, but that's good. Anyone else?
Property or art?
Munis. Okay, munis. Okay, I heard properties. Real estate. Real estate is a very important investment category. A lot of people do that. They own their homes, and they can also do investment properties or whatever else. It could be real estate. It's residential. It could be commercial. There's a lot of different ways that you can get involved in real estate. So real estate is another investment type. Retail. Okay. Retail, I think it's sort of supporting companies, maybe, things like that.
Like local businesses.
Local businesses. Okay. Yeah. And that's kind of like, whether you want to give them a loan or whether you want to give them, equity interest. So that's good. Okay. Any others?
Gold and silver.
There you go. Exactly. Gold and silver. So commodities, right? There's a broad class of commodities. You can do gold, you can do silver, it could be oil, it could be wheat. There's a lot of different things, right? There's a lot of animal products with that too. But you can, for whoever wants to do that, you can invest in this. And it's all gets complicated. You do, it's derivative instruments, it's futures, and you get very complicated into commodity investing. But that is an area, right? For sure. Anything else? Crypto. I was waiting for someone to say that. So now we have this whole new class of digital and crypto assets, right? And if anyone really understands them really well, I would love for you to come up a little bit later and help us explain it all. But it is legit a class of investments. And people are doing more and more with it. And they can do a lot, not just with crypto itself, but with, whether it's tokenization, whether it's NFTs, there's a way to expose yourself if you want to, but there's also risks. Everything is risk versus reward, right? One of the key points of this talk is typically you're going to follow this trend. If you're going to get a high potential return, it's going to be high potential risk. If you're looking for something safer, that's low risk, there's a potential of generally lower returns, right? Risk versus reward. That's one of the key things here. And one more class I'm just going to mention here is collectibles, right? Some people invest in art. You might invest in coins or stamps, or it could be like, art. I'm sorry, someone said. Anyway, no, that's good. So anyway, collectibles are there too, right? So out of all these different types of classes, there might be other ones that are alternative, other types, but these are broad classes. There's about these 7 broad investment classes. So what I want to focus on now is stocks. And stocks are generally very risky relative to putting your money in your mattress or in the bank. But I want to focus on that for a few reasons, right? And what are stocks? Again, ownership of a company. And there's different ways of looking at stocks. Some of them are publicly traded stocks, and some of them are private stocks. So the publicly traded ones, you can actually go to an online broker or broker and buy shares easily, and you can sell your shares. It's a very easy process. It's regulated. These companies go through various reporting requirements, and so you have a lot of information about these companies that are public. So publicly traded companies are usually on exchange, and you can buy and sell those stocks based on whatever your feelings are about the future, what's going to happen to the world, to the company, to us, right? So stocks are good. Those are public. There are private stocks that it's hard for individuals to invest in, but it is possible, and now it's more and more possible in our world today. So I'll talk about that a little bit. So remember, public, usually you trade them on exchanges, you have a lot of information, and there's a market already. So usually there's a buy and a sell. There's a lot of demand depending on the companies, right? So that's good. The private ones, you have to go through some special negotiation or special funds or special individuals to help you get shares of private companies. Like the young man mentioned, local companies. There are a lot of companies. You might know a restaurant, or you might know a retail business that's vegan oriented. It's a vegan restaurant or whatever else. They might need funding, right? And so we can actually have discussions with them to figure out, well, if I were to provide this to you as an equity investment, I'm getting some, ownership of your company, or I'm going to give you a loan and you're going to give me some return. So those are all really good things for us to consider, especially if we know the local areas we live in and those companies and businesses that are looking, and we might be able to partner with them. But I'm going to go back to the more broad stocks, public and private. And secondly, you can do individual stocks, right? So a particular company, and you can make an investment in that company, or you can do funds, as someone had mentioned before, right? Mutual funds. So mutual funds are a good way to kind of have a number of different companies that are put into a collection, and then you buy shares of that pool, and then you get whatever the returns are of how those companies, those group of companies, what that does is that helps diversify your risk. Having everything in one, as they say, in the vegan egg, if you put everything in one vegan egg basket, right, whatever happens, it's going to happen, right? And you're going to be fully up and down with that. If you have a lot of different ones, then it's going to be sort of averaged in to whatever that is. Mutual funds are out there. There's thousands of them, right? Very few, if none, that are actually geared towards vegans. There are a lot that are socially responsible, quote unquote. There's a lot that follow good ESG practices. Few, but they're in the works. And so you're going to be seeing a lot more about this. But now, who knows what an ETF is? ETF. We know Sid knows what that is. Okay. Anyone know? Okay. Okay, a few of you. Okay. ETF is?
Exchange traded funds.
Exchange traded funds. All right. So exchange traded funds are really an interesting tool. Oh, sorry. Exchange traded fund. Yeah. And so it's basically a pool of different, potentially companies that are put together like a mutual fund, but it trades like a stock. And so you can actually buy and sell this on an exchange, and it makes it very easy. And now ETFs, there's an ETF for everything. You name it, there's an ETF for it. And there is, as you all probably know, a vegan ETF, right? And a vegan ETF is actually one of the most interesting developments in the past few years, in my opinion, because it uses negative screening criteria. And I'll talk about it in a second. Anyone know the ticker of the vegan ETF? Except for Sid. Anyone know the ticker?
BGN?
BGN?
Yeah.
Nope. Close. Very close.
ETF?
VE.
VEG?
VEG. Very close. VEGN. All right. It's a four characters. VEGN. So this was started in 1919. Anyone know the person who founded that? Wasn't me. Donald Watson. No, he passed away long before he coined vegan, though. That was very good. Coined vegan. Claire Smith. Claire's a good friend. She actually started this in 2019, and she, I think, has done something really important for all of us to consider. And what it is, it's taking a very broad index called the S&P 500, kind of large companies in the U.S., 500 largest companies, and she's done an assessment of those, and based on her criteria, she has said, you know what, I'm looking at each of these companies, I'm filtering out so many of them because they harm animals, because they're also not, they do too much in fossil fuels, and that's taking away, there's such a connection there. And she's done a lot of this work, and so it takes that 500 companies about in half. And she weeds them all out, negative screening, and the rest of the ones are either they really don't harm animals, it's kind of indifferent, or they actually help in some ways. So that's an interesting one that I would say for anyone who's interested, please look into this, right? It makes it easy if you want to invest. You know you got to do something with your money, right? This is one to consider. There's actually another vegan ETF. Anyone know what that is? No. Oh. Okay. Anyone? Okay. It's actually called the Veg Tech Innovation and Climate ETF.
Can you repeat that?
It's called Veg Tech. VEG.
Tech?
Yeah, Veg Tech. The ticker is EATV. EAT V. You're seeing a lot of new things coming up. EAT V. Oh, sure. Yeah. Veg Tech Innovation and Climate ETF. Yep. And the ticker is EATV. Again, I have no skin in the game here, all right? This is not, I'm just telling you things that I think are very interesting for you to consider and see if it's right for you. EATV uses negative and positive screening criteria to come up with their roughly 35 to 40 different stocks at the investment. All these stocks are actually looked at and are supposed to be either ingredients that help other products or they're actual processes or services that support the vegan world. So she actually this person is actually bringing in companies that you wouldn't normally hear about because they're vegan companies and they provide the raw materials or the ingredients for a lot of other products. And so it's kind of a very interesting one, and I have looked into it. I think it's really good, but that's just me personally. Everyone, so there's more and more of this happening. How do you bring Okay, so there's funds, there's these ETFs, and then there are private companies that it's kind of hard for individuals, the average person like us, to actually invest in, unless you go through some special channels. I'm going to give you a development, something I think is pretty exciting, and it's because you're familiar with the SEC. SEC is the Securities and Exchange Commission. It kind of looks at investing in the United States and how do we protect citizens and individuals from taking on more risks than they should, and how do we also make sure that the companies are following good practices. The SEC is an important government body, and they've approved something recently, not recently, probably 2012, the Jobs Act, and what it's called is equity crowdfunding. How many of you are familiar with crowdfunding? How many of you participated in crowdfunding where you like products and you support the company and you get something in return for it? Well, now there's a relatively new rule called equity crowdfunding. You can actually invest into some of these companies and get an ownership stake in that company. And we're talking about small amounts, $100, $200, $500, $1,000. Now it's possible. It wasn't 10 years ago. In the last 5 years, it's become really good. And so now you can actually help small companies get the money they need early on. That's one of the most difficult things for small companies. Where do I get my funding from? I've got so much money, right? I got friends and family. How do I get more money so I can blow this business up and really do good things, right? Equity crowdfunding is really big. You're going to hear a lot about it. And so, disclaimer, I'm actually involved with a company called the Vegan Investing Club. So I'm on the board of advisors. So my disclaimer is that I am actually a part owner of this company. And I want to mention this to you because I think it's a great idea, because what it does is it gets so many people to know about a lot of new companies, and these are early stage, right? Very high risk. But you can invest $100, $200, whatever you want into these companies, and the average person can invest up to $2,000 a year, which is allowed by the SEC for average individuals, into any crowdfunding type of a company, whatever you think is right for you. So anyone can do that. Now, if you're a richer person, you have more holdings, you can invest even more, right? But what I'm trying to talk about is what is the average person, what's available to them? And I'll talk a little bit about something a little bit more advanced called venture capital and private equity. But this crowdfunding is very nice because it's really kind of like pennies from many, where it's the strength in numbers, and then you can actually help companies. We've seen companies here. Some of them might be actually looking, and they go on these online platforms for crowdfunding, and they're trying to get people interested so they can raise $50,000 or $100,000. If they get a lot of people putting $100, $200 in, that's awesome. that actually helps them a lot, right? So it's that early stage funding, but you have to remember that this is very risky. These companies, a lot of these companies, sadly will not make it, but we want to support them because they're the ones who are actually out there trying to change, right? Displacing an animal product with a vegan product, a clothing item, a different, food item, whatever it is, all of those, right? So equity crowdfunding is something to think about. The Vegan Investing Club, disclaimer, I am a part owner, so I'm not trying to push it, but I think the concept is phenomenal, and you're going to see a lot about this too. So please think about that. Okay, for some of the more advanced people here, right? Venture capital. How many of you are familiar with venture capital? Several people are. Okay, so about 6 or 7 years ago, I got a few friends together. One of my partners was sitting here, maybe he's taking a nap, I'm not sure. That's okay. Anyway, we got 4 of us together and we're saying, okay, what can we do differently than we're doing already to help the vegan movement? We thought about this idea of venture capital, and you can raise money so you can create a pool, and then you can sort of invest in different companies that meet our criteria, in this case, vegan products and services, and help those companies where we do a lot of the research. And we figure out who's the management team, what's their model, who's their competition, what's their strategy, all of that. You look at all that, and you figure out the best ones and you fund them. The problem is that a lot of people are doing that. There's probably 20 to 30 different projects like that out there. And so that was one question. The second thing is, really you have to be an accredited, you have to be a sophisticated or an advanced investor to invest in these. And my goal was, how do I get the person who's already passionate and who already is interested, how do I get them to be involved? Well, VC is not going to do that for you. It's got a place, and that's fantastic, not for the average person. Private equity funds, similar. You have to find people who have large amounts of money, who are sophisticated investors, who put it in, and they can do wonders, just not for the average person, right? So those are good things. I can talk to you about the structure of venture capital funds, how it works, but they're high risk, high dollar amounts, and so again, for more sophisticated, advanced investors, they call them accredited investors. You have to be that way by the SEC in order to be eligible to fund those. So these are all good things, good strategies to think about, to know about, and to let people know. If you have any questions, I'm happy to answer anything on those. Yes, question.
What's the definition of venture capital?
Venture capital, right? So it's really investments into a pool that then in turn, so you become a part owner of that fund, and that fund in turn does a lot of research and invests into specific companies after that diligence is done. So venture capital is something that is also very big, but there are a lot of projects, and the average person, sadly, we're just not able to participate in things like that, right? So okay, so those are some of the things there. Now, what else do I want to address here? So we talked about funds, we talked about individuals, public, private, equity crowdfunding. We talked about those ETFs. Those are really some of the really good things. Now, there's some other investments, but I just want to always keep in mind, there's always that risk versus reward. The more risk you take on, the potential for more return, a higher return. The lower the risk and the more secure you want something, you're probably you should expect a lower return. And if someone's telling you the opposite of that, okay, I need to hear this. I really want to know what this is about, right? Because there are a lot of people who are looking to get money very quickly, and not everyone is well-intentioned, not everyone is noble. So as we all know, we have to be extremely careful in what we invest in, and talk to people you trust, talk to advisors, and there are good investment advisors out there too. Some good friends of mine have been on panels with them in the past. They are vegans, like us, who are really committed and passionate. They also happen to be investment professionals, right? Brenda Morris comes to mind. She's great. She's wonderful in Virginia. There's Joshua Levine, California. There's a handful of people out there that are very good. And I would say if anyone's really interested, I have no interest in this other than I want you to do well and talk to them and see if they can help you in your situation, right? So there are good investment professionals out there. That's their full-time job. That's what they do because they want to make sure that we can all, kind of build, more infrastructure, more foundation here. So investment advisors. Another thing is community banks or the vegan bank. I'm actually talking to someone. We've been talking for about 6 months now. How do we get a vegan bank finally off the ground? A lot of great ideas that have been going on for a while. But what does that mean, right? Now, instead of going to your local credit union or savings and loan or your local bank, you actually put it into this vegan bank and you're putting your money in. And you know that based on their charter and how they're set up, they're only going to invest in projects that are actually vegan oriented. Or, worst case, there's nothing that's harmful in those projects, right? So a vegan bank, you're going to be hearing more about these coming up. There's already some talk about these in other countries. In the US, there's some discussions already going. Anyway, we'll see. But that's a great alternative because you know where your money is being used and you should get a competitive rate of return. It's not together yet. Stay tuned. Vegan banks. Going back to this idea of local, we all want to, think globally, act locally, right? Every city that we all live in, there's probably not too far away a vegan business or someone who's thinking about something. And how do we come together and help support that community? There's not a lot of great ways right now, but they're in the works. And how do we get, like for instance, there's a restaurant that we were just at for an event, a vegan restaurant in DC area. It's called eLife. And, as you all know, with COVID and what's happened in the last few years, it's a very difficult business, right? Food prices have gone up, labor costs have gone up, the rents haven't gone down. How do people make it? And they really need support from our community. So if you believe in a project, you believe in something, how do we work up ways for us to make it easier to invest in these local community or local projects, be it a business, a restaurant, a service provider, whatever it is, right? So those are things that we're actually starting to look into a bit more as well, right? So investment advisors, local projects, community banks. So there's really a lot of different things that are happening, and things have changed so much from, like, say, 1960, obviously, to the 1990s to today. And you're going to see more and more changes. And so it's exciting. It's an exciting time, and it's hard to keep up, to be quite honest. But they all fall into some of these general categories. How do you pull money together to invest in certain projects, right? How do you invest directly individually in something? Or if I just go, to a private thing, or if I want to invest in a mutual fund or an ETF or some other project like that.